معرفة.
Bismillahirrahmanirrahim. We will be talking about Sukuk. But before that, it's very important for us to understand what is Islamic finance and what is Islamic banking all about. This becomes very important because today Islamic finance is not just a theoretical concept, but it's a practical reality which is not just practiced in the Muslim world, but it is also being practiced in much more developed and sophisticated financial markets globally. In terms of the numbers, right, it's very important to understand that when we say Islamic finance, we are talking about around assets under management of $4 trillion US. So it's a substantial market at a global level where there are more than 200 financial institutions in different forms, in different industries, meaning to say they are banks, there are funds, there are central banks, there are pension funds, and there are individual fintechs, which is in a way trying to give a boost to this market so that this as an institution, as a principle, prospers not just in the Muslim world but at a global level. Now, in terms of the principle on which, or in terms of the structure on which this whole industry is based, is that the striking difference between the Islamic finance and the conventional finance is in a way just three main differences. Difference number one is that in an Islamic finance transactions, it is very important that both the parties neither give interest nor take interest, meaning to say that if there is an interest exchange between the parties, that is not in compliance with Islamic finance. So that is feature number one. So any transaction where Islamic finance is involved should not have any kind of interest being exchanged between the parties. The second important aspect of Islamic finance is that in the transactions, in the contracts, there should not be speculation, meaning to say the element of risk is of course there, but the element of speculation is something which should not be there in the Islamic contracts, and that makes the contracts void. So that is the other feature which is very important to consider when we are looking at the Islamic transaction. The third important feature in Islamic finance is that there are certain industries in which the Islamic finance is not allowed to invest, right? So industries, for example, like alcohol, industries like tobacco, industries like arms and armaments, industries like entertainment, industries which harm the human society at large, and industries which are financial in nature, conventional financial in nature, meaning to say which are involved in interest-based transactions, so conventional banks, conventional insurance companies. So all these industries are in a way non-compliant when it comes to investment. So Islamic banks are not allowed to invest in them, nor allowed to support them directly or indirectly. So that is another important feature on the investment side. So these are the three main features, right, which you have to understand when we talk about Islamic finance, how Islamic finance is different from the conventional finance, how this industry, which is around $4 trillion US assets under management, is different from the conventional world. So this is how the main striking difference is between these both industries. With regards to some numbers, let me put some numbers. So the number of full-fledged Islamic banks rose by 36% to around 336 in 2022, while the conventional banks with Islamic bank windows and services increased by 84% to 274. So now this is just some old numbers which I am trying to give you and emphasizing the fact that the industry is increasing at a quite substantial pace. With reference to the assets under management, as I said, it has almost reached to $4 trillion. With respect to the assets under management, as I have said, it has reached to around $4 trillion, and bulk of the assets of this $4 trillion are in the banking industry. So almost more than $3 trillion of assets are in the banking industry, and the rest of the assets are in the funds, in sukuks, in insurance companies, and other financial institutions. So this is in a way how the asset book is differentiated. When you look at the growth pattern, so from 2016 until, for example, 2024, there has been always an incremental growth, and the projection is also quite ambitious because many central banks, many governments have committed to increase their share of Islamic financial institutions in their countries. When you look at the UAE Central Bank commitment, when you look at the Malaysian Central Bank commitment, when you look at the other Middle Eastern banks, central banks commitment regarding the increase of the share of the Islamic banking, you see a very positive trend in terms of the growth. In terms of the countries, again, you see that there has been an active participation, and the growth we have seen in multiple countries, be it Iran, be it Saudi Arabia, be it Malaysia, be it UAE, be it Qatar. We have seen them to be very prominent players in the industry. And then there are also upcoming countries with regards to increasing the share of the Islamic banking industry. When you look at Indonesia, when you look at Turkey, when you look at, for example, other countries, the Arab world, and also countries in Asia, supporting the industries. There are not just through financial institutions, but through other even modern fintech companies are being incorporated to increase the spread of the Islamic banking industry. The global GDP of the world today is something in the size of $100 trillion. And when you look at the GDP of OIC Muslim member countries, which is almost 57 Muslim member countries, we see that to be almost in the size of $24 trillion. So meaning to say that all the GDP of all the Muslim world put together is almost 1/4 of the GDP of the whole world. That is a substantial number, but of course there is a great scope and chance to increase it further. With regards to Sukuk, for example, the outstanding Sukuk currently is around $1 trillion, right? But at the same time, the outstanding bonds are in the size of $100 trillion. At the same time, there is the ESG growth is happening quite rapidly with regards to Islamic issuances as well. With regards to the equity markets also have a substantial share. So when you look at the global equity markets total market cap as of 2023 was $109 trillion, right? And with regards to the GCC private equity market size reached to around $4.2 billion. Yeah, so in a nutshell, what I'm trying to emphasize the fact is that there is a scope and we are seeing the growth in the Islamic finance industry, but at the same time, there is also a strong need and the requirement from the regulator, from the industry, from the stakeholders to support this growth and provide a very robust environment, legal environment, business environment, social environment, so that this industry grows and prospers.
معرفة.